Thank you for joining us today, Kimberley. Would you please be able to just introduce yourself, your company, and a bit more about your role within the company as well?
Yeah, no problem. Thank you for having me. Really happy to be speaking to FinTech Intel today. Kimberley Waldron. I am the founder and MD of Started PR. Previously founder and co-founder of Skyparler PR, so had PR and comms agency within the FinTech space for the last 15 years, predominantly leading PR strategies, public image strategy, go-to-market and investor relations for clients across the full ecosystem of FinTech, from payments, regtech, wealth tech, insurtech, paying specific attention to life events of emerging businesses. So whether that's going through regulation, going through the investment rounds, or bringing new products that are sort of changing something systemic about FinTech to market. That's what I do.
Brilliant. Perfect. And then following our new partnership with you guys, could you tell us a bit more about the exclusive PR diagnostic available to FinTech Intel company members and how it helps companies identify their next strategic communications priority?
Yeah, we're delighted to be one of the first partners in the new FinTech Intel ecosystem model. So delighted to be part of that. We wanted to create something with real value and meaning for the company members. So in simple terms, it's an opportunity to have an objective third-party viewpoint on where your PR activity is adding value, could be improved, you could do more of the things that are working, and to give as clear as indication as we can on how impactful your narrative is to the audiences you want to reach. And I think the timing is good for this because we are, as I mentioned earlier in our conversation, we're half year now. So anything that's working, you want to do much more of, and the things that are not working, it's an opportunity as we come out of the summer to refresh. And this diagnostic gives companies the opportunity to do that, whether you're a really early stage startup or perhaps a little bit more mature with, you know, an established marketing team. It's a really valuable data set, but also human analysis on where your PR could be clearer, stronger, more impactful, and also the things you're doing well, which is important not to forget. It's about doing more of the positives as well. And I think for anybody that wants to sign up, just go to the FinTech Intel website and any company member can sign up for free.
Perfect. And then many startups view PR primarily as a media coverage. How should founders actually think about PR as a commercial growth tool?
Well, if you look at, it sounds like a very simple thing to say, but if you look at the larger brands, the successful brands, they are the ones with a personality, usually founders with a voice, usually a standpoint on important economic or social issues. And I think it's very important to remember that whether you are starting out, you know, maybe even still at friends and family rounds, or you're, you know, had an exciting Series A, or maybe, you know, even some of the larger brands that are, you know, now profitable, that we are talking money in FinTech. So no matter what part of that journey or ecosystem you're at, we're talking money, and trust is never more important than when we're talking about money, financial transactions, which also include data. And if you want to be trusted by investors, partners, ultimately customers, you need to have a believable brand, a believable story, credible founders. And where do we go to look for that? Online, our online footprint, our brand becomes like an online avatar of our value set and what we stand for. And that can start from day one. So whether that's your owned channels, your LinkedIn, your socials, or even thinking about yourselves, your own brand as a media brand. We've seen, you know, not to mention, I hope it's not competitive in any way, but you look at brands like 11FS, who are a FinTech brand, but they're very known for their focus on communication as well, and how that builds value into that brand. And I think that from day one, you can start to do that as a founder. And ultimately, yes, PR and your brand is harder to measure, but there are ways of doing that. And especially if you work together with the media, the stats they have available, there's tools available, and with your own online channels, you can put together a very statistical report on ROI and how that impacts your commercial performance. But you're never going to lose. From day one, you're never going to lose if you invest in creating a believable narrative for yourself and your brand online. So yes, you can ultimately measure ROI, and that's where we all want to get to with the statistics and data available. But it's always going to be a win if you're communicating clearly and with purpose online about what you stand for and the problems you're trying to solve, if that answers the question.
Yeah, perfectly. And then from your conversations with fintech founders and leadership teams, what are the biggest communications and growth challenges companies are facing in 2026?
Think about that one. I think it's because we're on the coal face of that as well, because we are, third party to these businesses as well, and we provide a service, is knowing where to spend to get the results that matter the most, because priorities are shifting, and obviously we have AI search and LLMs, and that's slowly overtaking the impact of SEO, and it's understanding what activities are going to move the needle. I think the challenges haven't really changed from a few years ago, but I think people are feeling the pressure more on the dollar spend, because we have a very unstable sort of economic outlook at the moment. Sometimes it's like this every day, and as an agency, we're seeing on almost a month-by-month basis, like loads of inbound leads and loads of inbound inquiries, and then silence for 2 months. But I think the challenges are knowing what to spend and where to spend it to get the most impact. I would say that a way to possibly overcome that, and I hope I'm not answering the next question, is to view PR specifically as a very pointed tool. Yes, brand building, awareness, trust, all of those things we love to talk about as well, but you can be very, very directional and specific with your messaging and where you direct the efforts to get that seen and heard. So if you're going through a funding round and you've perhaps got an existing investors, but really that you need to go out there and build IP and build interest to get inbound from maybe some larger tickets or more institutional investment, then you need to be regular, consistent, showing building trust in the founder voices, but showing traction and perhaps communicating more about business wins. Whereas if you're in the regulated space and you're going through a process, maybe with the FCA or the Bank of England, it's knowing what to say, when to say it, when not to say, so you don't impact that specific part of that specific priority. So I think it's the challenges are knowing where to spend the money, but then I think you can rectify that quite quickly by acknowledging that PR and your brand image can be very, very specific. It can be well timed, and you can direct those messages to places of your mediums of your choice.
And then at what stage of growth should a fintech company start investing in PR, and how can they tell if they are ready to start investing in PR?
Well, I think it's deciding on the type of investment. I think businesses need to invest in PR from day one, whether that's maybe that's a sole founder representing themselves at a networking event. That is still public relations. That is, you are maybe the only public face of your business, but that is still a public representation of your brand. I think it's understanding what you have available to invest. So straight answer is day one, but that first investment might just be 30 minutes a day of your time on your owned channels. It might be half a day a month going to events, being seen, talking to the right people. So maybe only invest in time, which is super valuable commodity, as all founders know, time starved. But yeah, day one, but I would say be very specific about what you can invest, and whether that's time or whether that's financial investment, understanding why you're doing it. Day one, but understanding what you can invest in, why, and then how you're going to, put some checks and balances in place to see if that's the right move, especially because early stage teams, even when you're getting up to 10, 20 people or even larger, that you stay very time starved as a startup, I would say. So yeah, understanding why you're doing it and what means you have available to invest.
Yeah. And then for fintech founders preparing to raise investment, how can communications, positioning and brand credibility support stronger fundraising conversations?
Well, I think we've seen a little bit of a roller coaster in the last 10 years, even especially the last 5 years for founders, who's got the power? Is it the VCs? Is it the super angels? Is it the fintech founders? I mean, I think even today I was reading a post of somebody sort of saying, if you get investment, you're losing. You know, you're not winning because you're giving up equity. You know, there's lots of, it can be a political or quite a high pressured environment for founders who are taking on investment and deciding what type of investment they're going to take from whom and at what cost or what risk. But for most technology businesses, you know, taking on investment is an important step because, you know, you can scale. You might sit alongside a lot of other businesses in a stable where you can, you know, help each other, or, you know, you might be able to bring in skills that you as a founding team don't have. One thing I would say is that if you are visible, proactive, contemporary, consistent in the media and in where brands are publicly viewed and listened to, it can only add value to your investment raise. You're not just building, you're not, you know, sat in a dark room building something that you're going to expect the world to take on because you believe in it. You're starting to communicate about the place for your business in the market, maybe the wider macro needs for some systemic change in a particular market, your beliefs. You're communicating about your customer relationships, and by investing in that, you're making potential investors, third-party investors in your business, aware of your serious commitment and focus. One of the best things that we hear as a PR agency is we had an all inbound Series A, or we had, you know, investors banging on our door. And whether that's realistic now as that sort of investor fintech relationship has matured in the last 5 years, I'm not sure. But I think you have to acknowledge and be, as a founder, you have to see the value in having a visible, credible, trusted brand. And if you're in a room with, you know, somebody with a comparable product or comparable business, or you've seen similar growth, the value is going to be in the brand that's already building and building IP as well as tech and ARR, I think.
Perfect. And then what are the most common messaging mistakes that stop fintech startups from being clearly understood by customers, investors, or the media?
Me. That's the one. It's you wouldn't and I don't want to be in any way like derogatory or twee about this, but you know, sometimes you work with the most impressive, intelligent founders, built something from the ground up, something I could only dream of or imagine doing. But then they're so involved in what they're doing that they fail to take a step back and think, yes, that is good news for you, or yes, that is important to you, but you need to look at the wider context for that. Think about the ecosystem of media and audiences around that, and what are they listening to and why it matters to them. So I think the biggest challenge we have is, as specifically as a PR agency, is getting founders or marketing teams. Usually it's more when you're dealing with businesses that don't yet have a mature marketing department, but getting businesses to understand that you have to translate your message in between your brand, everything you believe, everything you want to say. There's a layer of communicators that you want to convince to do that on your behalf for free via PR usually. So you're not communicating directly with your SME or your garage forecourt owner down the road. You're actually talking to a set of journalists or podcasters or news curators or content curators for events that are thinking about their audience, what they want to read about, what they want to listen to, what matters to them, how is that impacted by contemporary issues in the news, what do they already have on their agenda. And I think it's being flexible in a way and a little bit altruistic about how you talk about the world, the problems you're solving, the technology, in a way that's going to make people value that message, want to listen, want to talk to you again and again, and to, you know, give you access to their audience. And I think sometimes it's easy to think PR or public relations is direct marketing, and that you're saying something and it's going directly into the ear of your end user. And that's not how PR works, as we know. You know, we've got to convince journalists, content creators, the whole ecosystem to buy into what you're doing. So yeah, that's the biggest one, I would say, that if I had to answer. And then the other one I mentioned earlier would just be trying to do everything all at once, when, you know, prioritize, build a believable and realistic narrative. And we don't need to get everything out at once. We don't need to put everything in every single article. Have confidence in the brand and the story you're building. But it takes a little bit of time to build a brand organically.
Yeah. Perfect. Well, I really appreciate your time today, Kimberley. I mean, it was a really insightful call for me myself, so I can't imagine how good it will be for our members. Is there anything else you would like to add today?
Just a little bit, that something we've focused on as an agency and with our advisory board is that the idea of clarity. And I think we touched on it at the beginning when you asked about why we're doing the diagnostic. And I would just say that now is a really good time. You know, we're partway through the year. We've got a very busy conference events season coming up in the second half of the year, especially, you know, in the autumn. Now's a good time to really take stock and don't be afraid to change direction or to do more of the things that are working and, you know, abandon the things that are not. For in terms of PR, now's a good time to really think about, take stock, look at what's worked, look at what hasn't, change direction and gear up for a very a busy second half of the year. And yeah, try the diagnostic. It's free. And you might get some separate, you know, insight from a third party, and that can only help. Something that we've been doing as an agency that I think is a little bit unique is we brought together 10 well-known communicators in the fintech space as part of our advisory board, and the focus of that advisory board has been to shine a light back on what's become a little bit of an echo chamber of communication in fintech. And the aim of that is that we all, as an industry, start to subscribe to what good communication looks like. Because as I mentioned again earlier, what we want is more better financial services technology in the hands of end users. And if we can't understand fintech, we can't use it. So yeah, that's been a big focus for us for the last 12 months. And one of the reasons why we wanted to do the diagnostic with FinTech Intel too.